What's up, everybody? How's everybody doing? I want to talk, at least I'm going to start off talking about oil. All right, so for those of you who have been receiving my report, MMT+Trader, you know that I have been skeptical on the rally in oil prices, particularly when WTI got above 50 and then above $51 a barrel. And my rationale behind that, my reason for being bearish or skeptical of the price rally, was that we have been seeing a consistent weakness in product demand in these inventory reports each week. Now, we have seen a little bit of a drawdown in crude inventories, but there was still that lingering product demand weakness. I'm talking about gasoline demand. I'm talking about distillate demand. In addition, we have seen very high levels of production. So what has been holding up the oil price, you had refiners taking a lot of crude. You know, they're running at record levels now in terms of their inputs to their refineries, but product demand was weak. And that's where it all lies, all right? And that's why I felt that we would see a reversal in the price, which you saw today, oil was down 5%. Now, that might be blamed on the OPEC agreement, which I find a little bit humorous because there was an agreement to extend for another 9 months. But as we saw in the last OPEC output cutting agreement, it did not hinder oil supplies, inventories from building up to record levels, all right? So whatever the catalyst was for today, the fact of the matter is I was right on this call that the fundamentals underlying this rally were weak and basically really pointing here to weak product demand, gasoline demand. And by the way, this, you're coming into peak gasoline demand season pretty soon. So it could be a wipeout here if you come into peak season and you don't have a pickup in demand. And at the rate that refiners are, putting out product, you could start to see inventory builds again in products very soon. So we were short in this run up. We sold in the mid 49s basis WTI. We're in the money now as usual. Always right, folks. And we'll see how this plays out. Now, as for the stock market, yes, that has been one situation. And let me just qualify this because I know many of you know that I've had a defensive posture on the stock market now for quite some time. But I am long stocks. We own stocks in the MMT+Trader report. And what I'm short against that is a S&P futures position, and some of us have that SDS, which is the inverse S&P ETF. This is all going to play out. I mean, it's taken longer than I thought. There has been a lot of, I think, unwarranted optimism. We haven't seen the tax cuts. We haven't seen the infrastructure spending. None of that stuff has happened. So, but we've seen a relentless, unrelenting bull market, rise in the stocks. We have no choice but to be long of, right, and all that stuff, all that good stuff. As for the flows, they are definitely slowing down. If you look at average daily withdrawals, treasury withdrawals, that's, spending, it is down 5% versus where we were same time last year since the May 8th continuing resolution. So when they did that thing, whatever they did in there, and everybody was screaming, oh, it caved in on spending cuts, it's going to be a big spending boom, whatever they did in there, contrary to what people think, what the media put out, I am seeing in the flows average daily withdrawals now from the Treasury down about 5%. So nobody knows that. Nobody knows that but me. One other thing, I'm the only one, well, I'm not even going to get into that. If you want to know what I was going to say right there, why don't you sign up for a 30-day free trial of MMT+Trader. Go to my website, pitbulleconomics.com, and just right there on the homepage, it says, get the 30-day free trial. Get it, folks. You like it? Anyway, that's it for today. I hope everybody had a great day. See you all tomorrow. Bye-bye.